Speaking of banks, private sector lender Indusind Bank reported largely a stable set of fourth quarter numbers today. However, there was a slight worsening in asset quality. We've got Ekta Batra now joining in with all the details. Ekta, what did you think of the numbers and how do they look overall?
Well, Indusind Bank reported what was a stable quarter this time round. So the NII grew around 37% on a year-on-year basis. The profit growth was around 25%. The profit growth was brought down a little bit because of the provisions, which in fact spiked up to over 200 crores this quarter, which compares to around 107.4 crores on a year-on-year basis and 177 crores Q-on-Q. But the other parameters look quite stable. So, for example, the gross NPLs were maintained at sub 1% at 0.87 versus 0.82%. The net NPAs came in at 0.36 versus 0.33%. They did sell loans worth around 40 odd crores to asset reconstruction companies, out of which 30 crores was already recovered by the bank management. They did mention that the slippages were at around 1.3% on an annualized basis, and their restructured book saw a movement of around 5 basis points. The net interest margins improved 3 basis points Q-on-Q to 3.94%, and the management statements included that the non-vehicle retail book in fact saw strong growth at around 45%, which is around 10% of their total retail book. The total vehicle finance book was strong at around 22% growth, and the total credit growth stood at 29%.